Good morning, traders. It's Friday, October the 7th. Taking a look at the charts, we got the SP 500 daily chart continues to hang out here over this limb, riding the 20-day moving average up and continuing to consolidate in this little bit of a pennant formation. And you could argue here we've got a little bit of a bearish channel that is kind of channeling in. It's at the lower end of the channel. Or there, you could argue here there's a little bit of a rally here and a little bit of a bull flag. So we could see it come to the upper end of this channel, which would extend up here, which we've talked about for last week here, which would bring us into this gap window fill, which is right through here. So we could see it move up, get up into this upper range again, and run into some resistance, or we could see it start to break down and start a precipitous fall down into the 2100 and below that level. So there's a couple of ways that's going to play out here. At this point, we are net short waiting for a collapse. There's a lot of little pivot lows through here that if it starts to drop, we're probably going to see a fairly sharp drop, something like we've seen over the last really 2 years. When we get a drop, it's like a 2 or 3 day drop. It happens in the blink of an eye, and then it has some type of knee-jerk reaction bounce. So we're kind of in position for one of these sharp drops and just waiting for that market to kind of hang over. Now, I did posted an article a day or two ago showing the bullish percent index for the SP 500. So the SP 500 here has been more or less moving up in the last couple of weeks, but the bullish percent index has been moving sharply lower and breaking down actually in a big way, indicating that there's very few stocks, fewer stocks each day holding the SP 500 up, and it's just kind of hanging here. And I think at any time we could see a pretty sharp collapse in price. Now, if we take a look, there really isn't anything moving big today. But if we take a look at the cycles real quick here, you can see here, this is the SP, this is the gold chart. And of course, we've only got about 5 days left before, 4 or 5 days before we finally hit this significant cycle low. This cycle low has been pretty much in the same spot for a long time. Getting there has been a little bit different, but these cycles have changed a little bit over time. But we usually have these major multi-month cycles that kind of bottom and top out. So when we get to the bottom of this cycle here in another 4 or 5 sessions, at most, we could be starting the next major leg higher, and this is the shakeout where we've had this significant pivot low here broken and the market's collapsed and everybody's panicked out. Just like what we saw in the last little bit of when this overall cycle topped out and then had this final kind of move to the downside, we saw the market, let me grab a marker here. We saw the market break down and pick up speed and have a very sharp decline, breaking a significant pivot low over here. And then the market bottomed and we saw a new leg higher to new multi-year highs. So that's kind of where we're at. We're at this final little stage. The market has broken a significant pivot low. It's picking up speed to the downside, kind of cleansing everything. We're very close to potentially seeing the market have some very strong price action here going forward. And we could see new highs over the next couple months, new multi-year highs in gold and silver. Taking a quick look at the chart of bonds, very similar. We're only 1, 2, 3, 3 or 4 days away from the bonds also hitting a bottom, which makes sense because they're both safe haven plays. If the equities market breaks down and starts to sell off, we should see money flow into the safe havens, gold, bonds, and we should see them start to head higher. And you can see here we'll have a multi-month rally, probably to all-time highs here in bonds going forward. But we're under a little bit of pressure here for the next few days until these major cycles all bottom out. And it looks like a pretty sharp knee-jerk reaction. We've got a lot of all three cycles bottoming out pretty much the same day here, and a very sharp short-term cycle up, and overall the move is higher here. So that's kind of where we stand in the grand scheme of things. And again, go back to the equities market. You can see here we should sell off, maybe test these lows here around the 2100 mark, maybe see it kind of consolidate, grind its way a little bit, try and hold up, and then we could see it have a much larger sell-off from that point forward. So another one here, another safe haven play that has been completely out of favor with the chatter of an increase of interest rates in December. Obviously, the US dollar has popped based on that, but the utilities index. Let me just zoom out a little bit here. Now, here's the utilities index. This is a pretty significant drop going way back in time. Usually this is about as much as we see the utilities drop before they find a bottom. And I drew in some Fibonacci numbers here, extension numbers, using two different points. This top level, this low, and this high gives us this reaction low down here at the 46.60. And then another one doing the more recent pivot high from there down to here, back up, and it gives us this shorter one. So you can see we tagged that one actually yesterday and the market rebounded. So everything is starting to align that we're about to see the safe havens. They're all either getting oversold, cycles are bottomed, or utilities we are seeing find a key support zone and starting to find support and putting in a bounce. We could see a very sharp rally back up in utilities and potentially go back up, test these highs and go forward. So safe havens are very close, I think, to the end of this kind of washout panic selling across the boring safe haven plays, and I think that's about to the tides are about to change. We're going to see money start flowing into those areas. So overall, that's where we stand in the grand scheme of things. Let's just pull up the US dollar index. US dollar index, you can see here, big pop up there yesterday. Obviously, that put more pressure on commodities, precious metals, and miners, but we're seeing that kind of, it's picking up, it's kind of popping and hooking up. Gold does this quite often too. You find this type of pattern here. It pops and hooks up, shakes gets all the shorts out because this was a bearish pattern. You can see it squeeze all those shorts out. And then I think we could see this reverse and head down. So I'm keeping my eye on it. If we look back in time a little bit, something very similar to, let me grab a marker here, to these type of things over here where the market forms this bearish pattern and it just keeps kind of hooking up and popping up to new highs, and then it drops and eventually pops up to new highs again. And it's just kind of the market trying to shake everyone out. You get these pops in price, and then eventually you see it give way and we see a great big drop to the downside. So I think that's kind of very close to where we're at, and this bodes well with the bottom in precious metals, that when this finish kind of loses its upward momentum over the next couple of days, we could see the US dollar plunge, and that will put that bottom in that cycle low that we see in gold happening. This could work out extremely well for the drop in the US dollar happens at the same time, which more or less triggers that rally in precious metals. So that's where we stand, and that's where we're heading next week is, I think, a significant low in safe havens next week, and we're going to have some pretty good opportunities to the long side going forward. Anyways, that's it for now. Take care. Bye-bye.